Hi, welcome back to Joe Blogs. This video is the next in a series looking at the financial implications of Russia's invasion of Ukraine on the global economy. And in today's episode, I want to talk to you about oil. Poland have announced that the major pipeline that runs from Russia through Poland and into Germany and a variety of other countries has developed an unexpected leak which has caused all of the oil flows to stop. Now at the moment we don't have any details as to whether or not this is a terrorist attack or whether this is just a leak, but it presents a good opportunity to have a look at what's going on with regards to oil supplies from Russia to the EU and what the likely position is over the next few months. Because we've been focusing a lot of time and effort on the gas supplies. Europe is highly dependent on gas. But actually in 2021, around 70% of all of the purchases from Russia related to oil. So this is a much bigger market from the EU's perspective. And although there are significant sanctions in place against Russia, there isn't actually a sanction in place right now that prevents EU companies from buying oil from Russia. The UK, which is no longer a part of the European Union, unilaterally came out and stated that it would not buy any further oil from Russia. But most of the countries in Europe are still buying large quantities of oil, and the pipelines that are in place are supplying over 1 million barrels per day. So in today's episode, we'll have a look at the DRUZHBA pipeline, which is the main pipeline that Russia have constructed. And this is the one that has now developed a major leak in Poland. So we'll have a look at that pipeline. We'll talk about the potential risks with regards to attacks on this pipeline and also other infrastructure that's in place both in Europe and the rest of the world, because that's becoming a bigger issue. Since the Nord Stream pipeline attacks, all countries around the world are now concerned about infrastructure that is vulnerable, that would leave their country exposed. So we'll go through some of the details on that. We'll have a look at both the historic and the current exports of oil from Russia, both to the EU and the rest of the world. And we'll talk about where the EU is likely to be able to source replacements from and what the implications of that are in terms of cost and the global economy. And then we'll go on to have a look at the details of the European Union ban, when that actually takes effect and what it applies to, and also the price cap that's being talked about right now by the G7 nations. And then finally today I wrap up with my summary as to what I think the implications are of the ban on Russian oil for both Russia, the European economy and the global economy. But before we get started on all of that, as usual, I'm going to ask you for a thumbs up at some point during this video if you're enjoying the content. Please subscribe if you haven't done so already. I'm moving slowly towards that 200,000 target, so if you could help, that would be fantastic. Don't forget, I always include chapters in these videos, so if you don't have time to watch the whole thing, you can pick and choose what you'd like to watch. And if you'd like to support the channel, please have a look below, where you'll find links to YouTube Super Thanks and membership, as well as Buy Me a Coffee, Patreon and Amazon shopping links. Over the last 20 years, Russia constructed major pipelines to supply gas, oil and ammonia directly to customers in Europe. And these pipelines were constructed in order to provide a cheap and efficient way of moving all these sources of energy directly to the countries that wanted to buy them. And this map shows the route of the major pipelines. The gas pipelines are shown in green, the oil pipelines are shown in red, and ammonia pipelines that we've not discussed before on the channel but provide a really important raw material for fertilizer production are shown in blue. Now this map is a simplified version of the pipelines that exist in Europe and show the main pipes that are actually transporting the majority of the fuel directly from Russia into each country. In order to move the gas and oil onto all of the end users, there are actually a myriad of smaller pipelines which can be seen on this map. But if we jump back to the map which shows the major transport routes, the DRUZHBA pipeline is shown in red and is one of the longest oil pipelines in the world and is over 2,500 miles in length. And the pipeline was constructed to carry up to 2 million barrels of oil per day and has delivery points in Ukraine, Belarus, Poland, Hungary, Slovakia, Czech Republic, Austria and Germany. The northern branch is also connected to the terminal port of Gdansk in Poland, which is used for oil exports. And all of the countries that the oil moves through are paid transit fees. Polish pipeline operator Pern, which is in charge of the Polish section of the DRUZHBA pipeline, recently announced that its automated detection systems had found a leak in one of the lines. At the time of making this video, the exact cause of the leak had not been established. However, Pern stated that the leak was located around 44 miles from the western city of Plock and was on the main route transporting crude oil to Germany. News of this leak following on from the recent explosions on the Nord Stream pipelines raises the spectre of infrastructure sabotage and attacks being undertaken to prevent energy being supplied to key countries in Europe. Now, you may be watching this thinking, well, does it really matter? Because Europe have decided to stop buying all energy products from Russia anyway, so who cares if anybody blows up the pipeline? Well, in theory, that's right. Europe does want to stop buying energy products from Russia, but in practice, it hasn't happened yet. At the start of 2022, the EU was buying 2.6 million barrels of oil from Russia per day. In August, that figure had fallen, but they were still buying 1.7 million barrels per day. And if you think about a barrel of oil being roughly worth around $100, then that means that the EU is still paying $170 million per day to Russia for the supply of oil. It's still the largest single supplier of any country in the world. So even though Europe wants to stop buying from Russia, it isn't actually stopping, it's still buying massive amounts. And a lot of that oil is being shipped directly through this pipeline. It's delivering around 1 million barrels per day. So around 2/3 of all the oil that is being bought by Europe is coming through this pipeline. So the potential loss of this infrastructure would have a really damaging impact on Europe and its economy in the short term. And we don't know exactly whether or not this leak is the cause of a terrorist incident. It's most likely to be an accident because it doesn't seem to have been an explosion. There isn't any evidence of any smoke or damage or anything of that nature, in the same way as what we saw on the Nord Stream pipelines, where there were reports of detonations and we could see the massive release of gas that was coming through the ocean. But even if it is an accident, it highlights the fact that this pipeline is exposed and is at risk of somebody taking some action against it. And it wouldn't really matter who's behind this sort of incident. It could be Russia, it could be a country from Europe, or it could be a group from another country around the world who wants to disrupt those supply lines. But the bottom line here is that currently Europe has a massive dependency on this flow of oil. And if somebody decided to attack that method of delivery, it would cause Europe major problems and would send the price of oil globally skyrocketing. Now, the protection of infrastructure assets is becoming a major issue for all countries around the world. As a direct result of the Nord Stream attacks, most countries have now started to increase their security and are looking into ways to try to protect their vital infrastructure. But protecting these major infrastructure projects is really difficult because a lot of them are laid under the sea and run for hundreds or thousands of miles. So it's actually impossible to be able to protect the entire length of these pipelines and cables. And the only real deterrent that you can put in place is to have monitoring and surveillance systems that alert you to any problems, and then you can do an investigation after the event. So that's what's happening at the moment on Nord Stream. The Swedish authorities sent in their crime investigation unit. They've sent unmanned vessels down to the bottom of the ocean to look at these holes that have been blown in the pipelines to try to get to the bottom of who did it. But that doesn't really help you if your infrastructure has been destroyed. Yes, you can put together a case and work out who may have been behind it, but ultimately if you lose your supplies, that's going to cause you a problem. And it's not just oil and gas that countries are concerned about. Communication, technology, payment systems are all dependent on having good internet connection. This map shows the major cables that have been laid under the oceans all around the world to provide internet connectivity to all countries. There are over 500 of these major cables, and many of them run for thousands of miles. They are laid across the bottom of the ocean, and obviously they are not being protected on a daily basis. And this map is public property, so any country in the world can identify where these main connections are. And if a country wanted to cause maximum chaos, it could target key connection routes between, for example, the USA and Europe. It would bring down the internet, it would take down payment systems, it would take down phone connections, and it could potentially cause financial chaos. And of course, in addition to physical internet cables being attacked, there is also the ongoing risk of cybersecurity, of malicious digital attacks, ransomware, and attacks on data. And really the point of highlighting this is that the war in Ukraine is not just contained to the physical fighting that's going on the ground. We're now starting to see implications of this fight appearing outside of Ukraine. So we still don't know who was behind the attacks on the Nord Stream pipelines, but somebody went out of their way to destroy both of those pipelines. And we're now hearing about a pipeline in Poland that may or may not have been attacked, But the issue here is that we may start to see other incidents appearing all around the world that might be related to what's going on in Russia. President Putin recently came out and stated that the West are supporting Ukraine and that Russia will fight back against this support. Now, there's no details on what that means, but it may well be that attacking infrastructure is seen as a way forward in terms of damaging the West and its economy. So this represents a major risk if Russia decides to escalate its position and start to attack other countries apart from Ukraine. The supply of oil from Russia to the EU historically was a really important source of revenue for Russia and a really important source of oil for Europe. In 2021, Russia provided around 25% of all oil purchased by Europe, and that equated to around 45% of all of Russia's exports. And the total value of those oil exports was more than $100 billion for Russia. Now, in terms of the volume of oil being purchased by the EU, it has reduced from around 2.6 million barrels per day at the start of 2022 to around 1.7 million barrels per day in August. So if you annualise the figure of 1.7 million barrels per day in August, that would equate to around 620 million barrels per year. And if you apply a rough price of $100 per barrel, that would equate to around $62 billion of revenue for Russia. Now, if we check that against the total revenue received for 2021, it does represent a reduction from the $104 billion that Russia earned. However, the reduction is not as great as you would have expected, given the fact that the whole of Europe wants to move away from buying oil from Russia. This chart shows the volume of crude oil imports into the EU and the UK over the course of the first 8 months of 2022. And you can see that there has been a reduction in the volumes from Russia, but in August it was still the biggest single supplier. And one of the reasons for that is that it's been difficult for Europe to be able to source the sort of volumes that they need from other countries. The start of 2022, Europe was buying around 2.6 million barrels of oil per day from Russia and around 1 million barrels per day from both Norway and the United States. There has been an increase in supply from both of those countries, but it hasn't been sufficient to be able to stop buying from Russia. So in August, we saw imports from the USA rise above 1.5 million barrels per day, and the figure from Norway was around 1.3 million. And the reason for this slow transfer away from Russian purchasers is that firstly, it's difficult for the USA and Norway to produce enough in terms of volume to satisfy the demand from the EU. And secondly, the logistics of being able to move this volume of oil is challenging in the short term. And the other reason that Russia's revenue from oil sales to the EU is still staying high is because we've seen a big increase in prices. This chart shows the average monthly volume and value of oil that the EU is buying. And you can see that we've got the figures for 2018, 19, 20 and 21. And then we have two separate columns showing Q1 and Q2 from 2022. Now the blue line at the top of this chart represents volume in metric tons, and 1 metric ton equates to around 7.5 barrels of oil. So if we look at the history here, we can see that there was a reduction in the volume of oil imported in both 2019 and 2020, 2020 being the year that was most impacted by the COVID-19 pandemic. There was an increase in the level in 2021 as the world came out of all of the lockdowns, and the number of barrels per day increased in Q1 22, and then there was a significant increase in Q2, and the current rate of import is now at the highest level that it's been at any time in the last 4 years. But overall, the shape of this graph is relatively flat, so there hasn't been a massive increase in the volumes over the last 4 years. But if we look at what's going on in terms of the average value of oil per month, we can see that in 2020 the value fell significantly as a result of reduced output all across the world. That led to reduced demand for oil and the price came down. In 2021, as the world bounced back, prices started picking back up again. But in the first 2 quarters of this year, prices have exploded. As a direct result of Russia's invasion of Ukraine, prices got up to around $120 per barrel and are now trading at somewhere in the region of $100. So you can see the dynamic here is that although we haven't had a massive movement in terms of volumes, we have had a massive movement in terms of the average cost per month. In 2021, the average monthly cost of imports for the EU was coming in at around 25 billion euros. The average monthly cost in Q2 of 22 was above 60 billion euros. So the average monthly cost has more than doubled as a direct result of the massive increase in oil prices. And of course, this is benefiting Russia. That's one of the reasons why their revenues haven't fallen as much as you would have expected, because although the volumes have come down, the actual price per barrel has gone up, and therefore overall Russia is still receiving a significant amount of revenue. So as it stands at the moment, there isn't actually any restriction applying to any countries in the EU from buying as much Russian oil as they want to. And it's been reported that some countries have actually been increasing the amount that they're buying. Now, Europe is obviously fully aware of what's going on right now, and the EU has now formally agreed to ban the import of Russian oil products. However, that ban is being staged. So the first round takes effect on the 5th of December and applies only to crude oil that's being transported over the sea. So all countries will still be allowed to buy the crude oil that's being transported directly by the DRUZHBA pipeline. And that equates to around 1 million barrels per day. And the second part of the ban applies to all refined products. So this will be gasoline and diesel that are used on forecourts to fill your vehicle. Now that ban doesn't actually take effect until the 5th of February. So realistically, we've still got around another 4 months before Russia will really start to see a huge reduction in the volume of its exports to the EU. And in terms of exemptions, some of the European countries such as Hungary and Slovakia that are landlocked and are struggling to be able to find alternative sources have been given until the end of 2023 to be able to find alternative suppliers. Now, one of the mechanisms that's being discussed right now by the G7, so the biggest 7 economies in the world, is to apply a price cap on the sale of all Russian oil. Now, this sounds slightly perverse because how can the G7 tell Russia what price that they're allowed to sell their oil at? Well, the way that this will work is it all really focuses in on the logistics of the transport. Russia transports most of its exports overseas, and therefore it needs to have ships which need insurance and various other logistics surrounding that transport. And the majority of the companies that provide specialist shipping insurance and associated products come from the G7 nations. And the way that this price cap will operate is that that insurance will not be valid unless the price agreed by Russia for those cargoes is below a certain level. So essentially, Russia will not be able to get internationally recognized insurance and associated products unless they agree to reduce the price that they're selling at. And the price hasn't been disclosed yet, but it's likely to be set at just above the production cost for Russia, so giving them a very small amount of profit. And I've heard on the grapevine that the numbers being talked about are somewhere in the region of $55 or $60 per barrel, so significantly below where the markets are right now. Now, Russia is obviously furious about this idea and has stated that if a price cap is applied, then it will stop all of the export of all of its oil and drive up the international prices to above $200. But the problem with that is that they would be cutting their nose off to spite their face, because oil is the biggest single earner for Russia. It needs those revenues to be able to keep its economy moving. There are a lot of people employed in the industry in Russia, but it's a really important source of overseas income for it. So realistically, Russia will not be able to stop all of its exports. And as I've mentioned on previous videos, there's nowhere for Russia to be able to store all of this oil. So if it did stop its exports, it would also have to stop all of its production. And that would cause major technical problems for all of those sites, because collectively they're currently drawing around 10 million barrels of oil per day out of the ground. And if you put a stop to that overnight, then you would have major problems getting all of those oil wells started again. Now, from the buyer's perspective, there's actually an attraction for this oil cap concept. Because if you're India or China, you can do deals directly with Russia and they may be offering you a discount. But if there's an internationally agreed oil price cap that's actually at or around that discount price, it's the best of both worlds, because you can carry on buying Russian oil at a low price and you can still carry on trading with the rest of the world. There is no risk of secondary sanctions being applied against you. If you go for the unilateral deal with Russia, then you are exposing yourself to that risk that the West will try to impose secondary sanctions, stop buying all of your products, and that would hurt your economy. So when you look at it in those terms, there's no reason why China or India would oppose this price cap. It's really only Russia who will suffer in the event that it's brought in. So what's the summary and conclusion today? Well, I wanted to post this video because news of the leak in the DRUZHBA pipeline is obviously concerning in terms of whether or not it's a terrorist incident. And it may well be that it's just an accident, they managed to patch up the problem and everything goes back to normal. But it does raise the issue as to what would happen if somebody did decide to target all of this infrastructure. It would cause major problems for Europe and also the global markets. Because as we've seen, as soon as there's a change in terms of the buying patterns, if Europe suddenly has to start buying more oil from the Middle East and the USA, that drives up the price of oil globally, and the price of oil feeds through into the price of everything. So over the last 7 months or so, since Russia invaded Ukraine, we've seen those oil prices spike, and we saw prices go up all across the world, and we've got really high rates of inflation all across the globe, which is now pushing us towards a global recession. So there's a strong correlation between what happens in global oil markets and what happens in the global economy. And the other point that I really wanted to raise in this video is that Europe is still dependent on Russian oil. Even though all of the sanctions are in place, and we've sort of got to the frame of mind of thinking that Europe has moved away from buying everything from Russia. As you've seen in the charts I've shown you, Russia is still the #1 supplier to the EU and is selling over 1.7 million barrels per day. Now that's difficult to be able to replace from the EU's perspective. It's trying to increase its imports, and we've seen volume increases from both the USA and Norway. But we have exactly the same issue here as we do with gas. Russia has been sending this oil via pipelines, and that's really easy and convenient for all of the countries, and it's also cheap. It's the cheapest form of transmission. If you then have to switch away from that pipeline to taking all of your deliveries overseas, it becomes much more of an issue because an oil tanker is restricted in terms of the amount of oil that it can carry. It's not like a pipeline which is constantly flowing. So you have to wait for that delivery, it has to come into ship, it has to dock, you then have to remove all of the oil, and then that ship has to move away and you wait for the next ship to come in. So it's a much slower process and it's much more expensive. There's more handling involved, there's more cost. Obviously that ship has to pay for its own fuel to actually get across the ocean and deliver the oil. So there's two real challenges for Europe here. Firstly, the logistics of being able to actually get hold of the volumes of oil that it needs to replace the 1.7 million barrels per day that's being delivered by Russia. And secondly, there's the cost implications, because all of this is going to be much more expensive than taking that oil through a pipeline. And we haven't really seen the impact of that feeding through into the global economy yet. Over the course of the next 6 months, we will see the EU ban coming into effect. Firstly applying to crude and then secondly applying to refined products. And it's likely that that's going to send up the price of oil globally because Europe's going to be in the international markets having to buy more from the USA, Norway, the Middle East, and therefore demand will be increasing at the same time as Russia will have all of the sanctions applied against it. So that means that we will see a contraction in global terms because Russia won't be able to sell in as many markets as it does right now. At the same time as that's happening, OPEC has also stated that it intends to reduce its global supply. So that potentially could mean that we've got a further reduction in the amount of oil that's available globally. So there's a very real chance here that we could see the price of oil at least staying where it is right now, or it could go even higher. And if that happens, that puts even more pressure on the global economy. And as I said a few moments ago, inflation's already sky high in a lot of countries. So it's going to put more pressure on inflation, more pressure on those economies, more pressure on GDP, and is likely to accelerate the global slowdown. Now, in terms of what the impact on Russia will be, Europe has been the biggest single export market for Russian oil for the last 20 years, and that market is going to disappear over the next 6 months. In 2021, Russia earned over $100 billion from oil sales to Europe. Whilst the volume of oil sales have fallen in 2022, the absolute value has still been quite high because we've seen this increase in price. And it's estimated that Russia will earn around $60 billion this year. But going forward, all of that revenue is going to disappear. And the big challenge for Russia is how do they replace those sales? Because the pipelines that are in place in Europe not only are an easy and cheap way of European countries buying the oil, but it's also a very convenient way of Russia selling it. It can move massive volumes on a daily basis. Switching that oil supply out into shipping has the same challenges we've just talked through. You need to find the ships, you need to load the ships, you need to pay for the transport. It's much more costly. So it will raise the price of Russian oil in the international markets, and it will also slow down the amount that it can sell sell, because it's more difficult to be able to ship everything than it is to move it through pipelines. So the bottom line here for Russia is that they're going to see a massive reduction in their revenues. And on top of that, there's the potential for this oil price cap to be applied to all of their future sales, which would remove all of their profit. So that would be catastrophic from Russia's perspective. Now, even if the oil price cap isn't applied, all of the countries who are looking to buy Russian oil, such as India and China, face the potential of secondary sanctions being applied against them. And that means that they may be reluctant to buy that Russian oil. So overall, Russia is facing a massive challenge of having to find replacement markets for all the European countries that it's losing. It's got logistical challenges, it's got oil price cap challenges, and it's got secondary sanction challenges. So the outlook for Russia is really quite bleak at the moment. The $100 million that they earned in 2021 is likely to be significantly lower in 2023. So hopefully you've enjoyed today's episode. You found it interesting, thought-provoking and educational. If you've liked what I've said, please give me a thumbs up and don't forget to subscribe if you haven't done so already.